morning, oracles. My goodness, yesterday not so great, but sort of okay. We filled our gap down to 728, but we had to fall 6% to get there, so not the greatest of days. But I definitely picked up some more as we dipped on down, and I still have plenty of cash because, I gotta be honest with you, I don't know how much further we're going to fall. I thought for sure we were going to climb up and fill that gap to 865 before we fell back down. We didn't. And so here we are now at 723, wondering what's going to happen next. Well, we had an average volume day of 28 million shares trading hands. RSI is still around 32, so we do have room to go down. Now remember, when we go back to the lows that we had back in February, we were under RSI of a 30 for a little while before we bounced back up. So we can potentially push a little bit lower before we rebound. Now again, we had talked about, making lower lows. We have now made a lower low again. So we really need to see a couple of days of bouncing back up to see how we're going to be on this dead cat bounce. But, yesterday wasn't great to see us down, closing just over 724. So now where do we go from here? Again, I don't know, but we're having a lot more macro. So this was sort of Tesla related because of the Shanghai news and because of macro news with, potential worsening recession information coming out. We may have a recession that's going to be worse than a paper recession. We may go into a 12 to 18 month, recession of pain, which could end up balancing things out, could balance out, the job labor shortage that we are having, could balance out inflation. So it's going to stink, but it might be a good thing in the long run to kind of get us back to a solid footing and foundation again. Lots of stuff to play out over the next couple of years, but I think a lot of this uncertainty is definitely weighing on the market. And then with Tesla in particular, with Shanghai, we thought that today they were going to be able to open up second shift. Sounds like that might not be happening until June 1st now. Opening up on June 1st, they are looking to get back to their 26 vehicles per day that they had been producing. So this is definitely longer drawn out than we had anticipated. This could definitely weigh on the Q2 numbers that come out. But again, we know that Tesla has a few things in their back pocket to make the profitability look as good as it was before. Again, lots of different things that they've got to work out. But most of us already assumed we were going to have a rough Q2 due to the shutdowns in Shanghai. So for us, it's really just going to be a blip on the radar. The other positives that we have coming out to pay attention to when it comes to the Q2 numbers are profitability. Are they still going to be profitable? Have they worked things out for the factory ramps in Berlin and Austin? What are their margins looking like? Are they still over 30% margins for their vehicles? Especially with supply chain issues, costs going up. So are they keeping those margins high? What is the split news? Are we going to get that news at the proxy that we should see in a few weeks? Or are they going to have the official announcement during the Q2 earnings call? So that'll be more information to pay attention to. I think the production and delivery numbers are already worked into this because we assume they are going to be lower. So I think there's going to be other metrics to pay attention to when we get to Q2 to determine how we're going to trade after that. And now also, as we have seen over the Q1 earnings calls, it really doesn't matter. We are in such a pessimistic market right now overall that, earnings that come out that bad, your stock gets destroyed. They come out, good, your stock gets destroyed. You don't give me exactly what we want, destroyed. It doesn't matter. Your stock is going to go down regardless with earnings. Maybe Q2 is going to be different. Maybe we're going to get to the point in Q2 where like, maybe you've got bad earnings and it goes up. Yay! I don't know. We are in such uncertain times right now. Anything is possible. So I think a lot of it's going to have to do with macro at that point. But again, if Tesla gives good solid guidance and they continue as they have been with 50% growth year over year guidance for Q2, take that as your fundamental good news. Again, something we talk about all the time is pay attention to the fundamentals with Tesla. If the fundamentals are staying solid, don't worry about the stock price. If it comes down, that just means a better discount for all of us. And now another question that we have is, how is Tesla going to fare during a recession? Well, obviously during a recession, everyone is going to suffer. There are going to be very few companies that are going to do well in a recession. So Tesla, of course, being the large company that they are, is going to feel the brunt of this. However, Tesla has already proven that they have a lot of supply chain stuff set up and ready to go. And with the Shanghai shutdown, they have already mentioned it before that, yes, it has been shut down, so production is down, but it allowed them to stockpile a lot of supplies that they needed. So if we go into a recession, that could be a good thing because Tesla has a lot of this stockpiled sitting there ready to go. When it comes to the vehicles themselves and the sales, most people currently who are purchasing Teslas are not going to feel the brunt of a recession as much as people who would be purchasing lower end vehicles. So this could be a good thing for Tesla as well, as they'd be able to weather this storm even better. And then thinking about the news that we've been talking about with a dedicated robo-taxi and potentially a compact car coming out in 2024, the timing of that would be ideal. Because if we come out of a recession at the end of 2023, and then we have a compact car in 2024, guess who's all of a sudden getting jobs and has new money that they want to spend on a new vehicle? Hey, people who want to buy a lower cost Tesla. So it could work out very well timing-wise in Tesla's favor. When it comes to the stock price itself, we could see the split coming at the end of August potentially, and a split will do well during a recession because just like products that are out there, people who don't have a lot of money but want to buy a product are going to buy a less expensive version of that product because they don't have the money that they had before during this recession. Same holds true with the stock. People may want to buy, the stock, but if the stock is looking at between $700 and $1,000, it's going to look less attractive. But if we get a 10-to-1 split, let's say, and the stock is now between $70 and $100, that's much more attractive and could bring on a lot more investors during a recessionary time. And so in my head, I'm looking at, yes, a recession is going to be a very bad thing if we do get a deep recession that some people are projecting. Yes, it's going to be a very rough ride for the next 12 to 18 months, and emotions could definitely go wild, so make sure you do something to maybe set it and forget it for yourself for your stock portfolio. Maybe just put yourself aside and say, hey, you know what? I'm just going to set myself a recurring investment to dollar cost average for the next 2 years, and then I'll take a look at my portfolio again in 2024. Otherwise, it's just a matter of I'm excited to add as much money as I can during these times. I keep on going back to fortunes are born during a bear market. We are getting the poop beaten out of us right now. These are the times where we are going to grow the most. You learn more from bad times than you do from good times. You learn how to get through all of these things. You learn a lot about yourself and investing strategies during the hard times. When the stocks are rallying all the time, it's super easy. Hey, things are going up. I buy today, my stocks are up tomorrow. When you're going through these times right now, it's hard. It's hard, and you've got to learn a lot from this. So yes, maybe your portfolio is way down, but what are you learning from this? If you haven't sold, don't forget, you haven't lost anything. You don't lose any money until you actually sell. So your portfolio may be down, but you can lower your dollar cost average and increase the number of shares that you have. So when we do come out of this, you will have more shares worth a higher value in the future. And then your portfolio, and you're going to look like a hero because your portfolio is going to be so green. And these are just the things that I pay attention to for my own portfolio because I see where we are going in the future. We are headed toward EVs. We are headed towards a renewable energy future. I am going to be a part of this. I want to be a part of this. I want to have my portfolio heavily invested in these companies of the future. And if I can buy in now during the times when they're getting beat up the most, that is when I can buy the most. That means that I'm going to have even more of those stocks in the future when we get there. I can have even more Tesla now because I'm buying in when it's beat up. That's just my strategy. That's my mindset for the future. Let me know in the comments below what your mindset is during these times. Let me know if you think that we are going to be going through a rough ride for the next 12 to 18 months. And let me know if you are excited to be adding to your Tesla portfolio during these times when we're really getting beat up. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.